Suspects are expected to make an appearance there in Durban and KwaZulu-Natal. This is a story that we will continue to monitor throughout the course of this morning, bringing you up to speed with all the developments on the ground. For now, let's give you a sense of the very latest in the world of business. The local bourse looks set to open to weaker global markets this morning, with tech shares once again under pressure after a strong recovery yesterday. Markets have been roiled this week by a Chinese regulatory crackdown on tech firms, but markets have bounced back. The JSE has reached a record intraday high of 69.761 points. Executive Director at Citadel Global, Bianca Botes, joins us now for a market update. Bianca, very good morning to you. Always a pleasure to have you on the show. The rand looks to be losing strength in afternoon trade. Take us through what's driving those moves.
Good morning, Paul, and also good morning to the viewers at home. We've actually seen quite a significant risk rally yesterday that saw the rand recover significant ground against the dollar. And this morning we've seen it give back some of that ground. That is mostly attributed to some profit taking following that rally yesterday. And it can be seen as a slight correction in the market following those poor numbers that we saw from the US in terms of GDP, the unemployment benefit claims, as well as the dovish Fed that we, of course, saw take place on Wednesday evening.
Oil prices declined in early trade, falling for the first time in 3 sessions. What's behind the sudden dip?
We saw a massive rally in the oil price earlier this week, gaining as much as 3.5%, and that was largely attributed to an inventory drawdown in the US of close to about 4.1 million barrels. Since then, however, the market has started pricing in the risk of the Delta variant that is taking the global market and global economies by storm yet again. And there are some concerns linked to the Delta variant and what that means for the openness of economies moving forward and whether we will see more restrictions being imposed in the future. So that is dampening the oil price at the moment.
And gold, on the other hand, is on track for the biggest weekly gain in more than 2 months. Talk us through what's driving those gains.
Gold traded mostly range-bound this week. We did, however, see it break above the $1,820 per fine ounce mark. And that was on the back of a dovish Fed, basically where the Fed came to market telling us that they're not in the position to start raising interest rates yet. They're not in the position to start tapering back on quantitative easing, and that they will be keeping an eye on the economic recovery in the US as well as the Delta variant breakout to make sure that they actually apply their monetary policy committee and policy in line with these variations that we are seeing in the market. And then obviously those disappointing numbers once again you saw yesterday will definitely filter into that stance by the Fed.
And the US Federal Reserve said that they would maintain asset purchases at 1.7 trillion rand, at least for now. What does this now mean for global concerns about inflation affecting MPC decisions?
So we have seen most of the policymakers come to market saying that inflation is transient, so we won't really be affected by inflation in the longer term. And these massive spikes that we are seeing are expected to flatten out as economies progress and as time unfolds. However, economists and markets are keeping a very close eye on these numbers to make sure that economies don't overheat. There have been quite a few signals from the Fed, however, that these asset purchases could potentially start tapering down as we head into the new year. And they are expected to explore this element more at their Jackson Hole Symposium in August.
Oh, very well. Let's leave it there for now. The update on the markets, Bianca Botes.